It was interesting to see the reaction yesterday. It was a follow through and strength on the software names, which are consumers of HPC, high performance compute. The theory there is pretty simple, that their business gets cheaper in terms of processing power. But all of these comments that you're seeing out of Pat Gelsinger, and you're seeing out of Google, and you're seeing out of the founders of AI, increased efficiency results in increased application use, which results in increased compute, which results in increased power use and all the rest of it. I think the lowest downside trades is on this power side. We saw a ton come out of this group on sentiment on this immediately. But what people need to understand is that, and yes, I think it was valid, by the way, a number of these utilities were, trading up close to tech multiples. I look at a name like IESC, for example. This thing was over $300 on Friday, and it's down under 210 today. They've got earnings on the 28th.
Wow. Is that how big that was? Holy.
Yeah.
But to be fair, it went up from 200 to 300 on the Trump infrastructure news with Oracle. And
they had some company-specific catalysts as well, a refinancing of the debt, which makes a big difference to their earnings power. Look, this is an undercover company, and there are no analysts on it, which is why it sees these extreme moves. It also has a float of only 8 million shares.
Wow.
The founder owns 55%. But you have to understand that in addition to the demand that we're seeing from data centers, you've got a power grid here where 70% of all of the infrastructure is over 25 years old. In addition to that, you've got Trump and this new administration, reshoring, there's a reindustrialization. All of this consumes additional power. So you've got a grid that, since the global financial crisis, has not seen any load growth, and therefore hadn't seen any investment. And you had a lot of companies that were servicing that, like EPC companies, engineering, procurement companies, basically leave the space. So now those that are there, the names like AGX and the names like IESC, these are long-term contracts. It's roughly speaking, it's $1 million per megawatt to build these power.
190 to 133 on AGX on DeepSeek. Holy crap.
I think you could very much see IESC post their earnings back up at $300. That's a $100 delta. That's 50% on a $200 stock. That's my prediction. I think that's one of the safest ways to continue to play this. Power demand, yes, it's the thematic, and the sentiment is driven by data center. And you just heard me say, I don't think that's going away. Increased application use, all of this, whether you need less power, less compute for training. And Elias Escher has already said, we've already trained all the models on all the data on the internet. What's happening with DeepSeek? Well, one of the big innovations is RL, reinforcement learning. So you get more of that, you get more inference demand. In general, the sea continues to rise in terms of compute power requirements. So, and, again, there's all sorts of other reasons why the power grid is a great place to invest in terms of industrialization, reshoring, and so on.
I'm going to have all of these AI infrastructure, not so much the energy names, but AI infrastructure plays on my watch list here in after hours. And I agree with you. I think Meta and Microsoft, they're going to say, hey, it's important. We got to spend for X, Y, and Z reason. But I'd rather still wait for them to say it to take a trade. Sure. NBIS, I think probably the most liquid one out of the bunch. I think could have a crazy after hours. AGX, IEC, IESC, TSSI. We'll have a whole list of them that I'll be looking to maybe trade in after hours. So that's
just a quick note on that. If you're an AI app developer, you need the tools, and NBIS is the supermarket for those tools. They've already added both of the DeepSeek models. Those are open source. You can cut and paste whatever efficiencies, whatever elements of those models you like to build your own. This news about Baba having a model that's even better than DeepSeek, that's going to be available on NBIS. So again, this is an integrated cloud provider of software tools, AI software tools, and compute. It's like a one-stop shop. The demand for their services is not going down.